Okay, my name is James Daniel Chindengwike. I've graduated master's degree in accounting and finance at the University of Dodoma. Beside of that, I have graduated a bachelor degree of accounting and finance at St. John's University of Tanzania. Beside of that, I have graduated a diploma in business administration, specializing in accounting. Beside of that, I'm pursuing a Doctor of Philosophy of Business Management, specializing in international accountants at the Philippines University. Beside of that, I've already serving as assistant accountant, assistant lecturer at St. John's University of Tanzania for 2 years. Beside of that, I have served as assistant accountant at Nafuu ya Jamii Tanzania. Beside of that, I have already served as loan officer at Mbinga Community Bank. Currently, I served as tax officer at Tanzania Revenue Authority. So this is my historical background. So today I'm going to presenting the All World Muslim Education Conference in 2022 at Chennai, Pakistan. My topic is effectiveness of financial planning on public sector's performance in Tanzania. So we can proceed with another slide. Yes, the financial planning is very important in any country. Without financial planning, no achievement. You can see the most of the economic growth in any countries can be driven with planning, and the planning can be affecting the economic of any countries. So financial planning is very imperative in public and the private sectors performance, not only for developed country, but in developing countries. You can see the most of developed countries has already achieved the economic growth due to good financial planning, while the developing countries are not achieved because they are poor financial planning. You can see Tanzania is the one of the developing countries which are not succeeding in good financial planning. There are a lot of reasons that explain about developing countries. So in Tanzania, there is a problem in public sectors, especially in financial planning. So Tanzania, like other developing country, whereby public sector not achieved well. Poor financial planning leads loss of funds in both private and the public sectors. Absence of financial planning hinder the economic growth of any nations. We can proceed with other slide. Empirical evidence reveals that effective financial planning should be participated from subordinates to top management level. You can see the most of financial planning in Tanzania can be done on top management only. This is the problem according to empirical evidence. Empirical evidence support that financial planning should be starting from subordinates up to top management level. Previous studies done in different countries in the world show that capital operating cash flow determine the financial planning of the organization. Also, there is a positive association between financial planning and economic growth, as per Kisanyan and Amangwa at FBIL at 2018. There is a few studies done of effectiveness of financial planning on public sector's performance in Tanzania. So there is need to conduct this study. Therefore, the study intends to assess the effectiveness of financial planning on public sector performance in Tanzania. We can proceed to other slides. This is a research methodology used in this study. You can see that research approach which used in this study is mixed research approach. While study area is this is a public sectors, a big public sectors in Tanzania. Where we say TTCL is a company which dealing with telecommunications, is a public sector. When we say about TLR is a public sector that is known, the abbreviation is Tanzania Railway Organizations. And when we're talking about ATCL is a company, is a public sector that dealing with airline. The other company which used in this study are the survey that represent other companies, public sectors in Tanzania. It is TPDC. This is a public company that dealing with petrol. And the other one is TANESCO. TANESCO is a public sector that dealing with, and this study done on Dodoma region. Now is Dodoma city. The research design which used in this study is cross-section survey research design. Why cross-section survey research design? It's because it's easy to triangulate information from different parties. So this is suitable to use in this study, since this study involves staffs, and some of the information it comes from subordinates, and the other information comes from top management. So when you fill the gap that exists between subordinates and top management level, top management staffs, this is triangulation of information, and this cross-sectional survey research design will be suitable. The research approach used in this study, it is mixed research approach. So qualitative and quantitative was used in this study, since some of the data can be identified through interview, survey, and other reports can be extracted from various documents. For example, financial statements. And the targeted population was involved public sector staffs from above public sectors. And sample size it's 128 staffs. This is calculated from Yamane formula in 1967. Sampling technique, it's random and purposive sampling technique. This is a probability, random sometimes we call a probability sampling, since we calculated sample size from given populations, and thus is random because there are a lot of staffs involved in above public sectors. So you pick random to get a small staff that represent the big population of the staff. Purposive sampling also was used in this study, since some of the directors and chief executive officers above public sector was used to get some information. So purposive is non-probability sampling. So we take all directors and CEO above public sectors and included to the study. Data collection method. Primary and secondary data was used in this study. Primary was used in interview and survey, while secondary data are used documentary review. Move to the next slide. Yes, findings and discussions. First of all, in findings, you can see correlation and the collinearity results. There is correlations zero order. There is a partial, party, and a collinearity statistical tolerance. And VIF, when we talk about VIF, it means variance inflation factor. So when I'm starting with first paragraph in right side, VIF, I'm going to interpret the meaning of VIF. The abbreviation of VIF is variance inflation factor. You can see the first column, it shows 1.04. The second column, it shows 8.88. And the last one line from VIF, it shows 8.92. So when you look this this figure, you can see there is no figure that exceeds 10. That means this variable financial planning against the public sector performance there is no mathematical linearity problem, since the variable of VIF do not exceed 10 value. So this is a good results that show that there is association between financial planning and the public sector performance in Tanzania. We can proceed with the next slide. This is the model. And when we are talking about model, it means that this is the econometric model to justify my research. You can see there is R square, there is adjusted R square, there is a standard error square, and it is Dubin-Worston. So when we're talking about A is predictors and B is dependent variable. When we're talking about the predictors here, we are talking about financial planning. Financial planning is independent variable, and the financial in the public sector performance, it is dependent variable. So we are learning at once, we get this result. When you are talking about R square here, we are talking about in what extent the financial performance can explain public sector performance. You can see that financial planning explain public sector performance by 81%. This means that when the government of the Republic of Tanzania pay attention in financial planning, there is possibility to increase public sector performance by 81%. Adjusted square, it is according to the data corrected. Adjusted square, it means that when we are learning all variables at once, the same answer can be getting here. And another column is standard error. Standard error is a small mistake that can be done in the research. So it shows that there is 1.51. That means there is a small mistake but taken in this research. We can proceed to the next slide. Hello. We can proceed to the next slide. Yes. So the other results is predictable model coefficients. This show the beta when we unstandardized the coefficients in second column. It show B. B means beta. Beta means show the coefficients or show the correlations. So according to this data, explain that B is 1.39. This means that financial planning can be explained public sector performance by 1.39. And the standard error still remains the previous slide said. This is show the mistake that done on the research, since you know this is and when it's the primary data, some of the scholars argue that the most of the primary data has bias. So this is a bias that done in the research is 0.26. Another column, it is a T. T means it is t-test. And when we're talking about the t-test, the good model, we say there is significance since t-test is less than 30. And when you look in a table, you see t-test, it is 5.44. That means the t-test is okay for this study. And the last column, it shows significance. And when you are talking about the significance here, we are talking that the associations. And when you look about the significance here, we show the significance is less than 0.05. It means that there is associations between financial planning and public sector performance. We can proceed to the next slide, please. We can proceed to the next slide, slide number 9. Yes, this is a conclusion and a recommendation of the study. The study concluded that there is a statistical positive association between financial planning and the public sector performance in Tanzania by p-value of 0.04. Since this value is less than 0.05, which is a benchmark, so the results show there is association. The study recommends that the government should be increased the oversight. When we're talking about oversight here, we are talking about cross-checking the department among public sectors in Tanzania in order to ensure that the financial planning are implemented effectively and efficiently, therefore to achieve the public sector performance in Tanzania. We can move to the next slide. Please, we can move to the next slide. The study likewise suggests that all public sector organizations should make sure that the operation system, when we're talking about operation system, I'm talking about information technology. And when we're talking about the information technology, I'm talking about management information system should be efficient, as well implemented all in control that made by government, therefore can achieve the performance. Also, the study suggests that financial strategy. When we're talking about financial strategy, we are talking how to raise the fund, how to control the fund. Now, in Tanzania, we are introducing the gateway system, revenue gateway system. Revenue gateway system is a single account whereby all government sectors used to send the money. And the Bank of Tanzania, when I'm talking about Bank of Tanzania, I'm talking about central bank. We can manage that account, and after the end of the day, each transaction done on government can be made by control number. When I'm talking about control number, is a unique number that be given by single pair, and the last three can be paid, and this fund cannot be loses. So accountability is very important from staff